It's Your Money, sponsored by Strategic Wealth Designers.
All right, let's talk money, shall we? Bonds are an investment tool where money is loaned by investors to government agencies or corporations with a fixed rate of interest. So the question is, are they effective for your portfolio? Our good friend, Mr. Rob Lessio, joining us with some answers on that. Rob, so let's start with how interest rates and bonds are related.
Okay, first, let's start with the real problem. I mean, there's an alcohol shortage. That could be a problem. No, just kidding. A lot of people don't know this, but I have 4 kids. And just so you know, interest rates and bonds are like my children. They don't get along very well. So they're kind of like on a teeter-totter. And interest rates, if they're very low, means the bonds are very high. Well, in an inflationary period, those interest rates are going to start to tick up, which means the bond market's in jeopardy of crashing. I'm not saying that's going to happen, but it is a possibility. So it's something to be aware of.
All right, Rob, so you were talking about the market today as we talk about inflation. A lot of people wondering about that. So how does this relationship between bonds and interest rates apply to today's economy specifically?
Well, there's a big misconception, though, and this is where there's a big problem. Bonds are safe, right? You invest $1,000 in a bond. It pays you what's called a coupon twice a year. After 10, 20, 30 years, you get your $1,000 back. That's safe. Bond funds, on the other hand, are traded every day in the open market. And they just came off the worst quarter they've ever had. The forecast doesn't look very good. So people are honestly safely losing their money. And that's a concern.
A concern indeed. The topic that we continue to talk about almost every day here, inflation. I mentioned it before. How can investors protect their money from losing their value as inflation continues to rise right now?
All right, so you need to get assets moving in different directions. Maybe it's some type of indexed annuity. Maybe you have the ability to invest in a private equity fund, something as a hedge against inflation, but that will also keep you safely protected from market risk. And that's the thing, because if you're invested in interest-related products, you're going to have an issue, especially right now in the short term, but really in the long term.
Rob, my friend, we are out of time. Happy holidays to you. I know you're missing Paula today, but I'm glad I got to speak to you for just a little bit, my friend.
100%. Merry Christmas, man.
Same to you. To learn more about this and other business-related news, go to local12.com/community.